Welcome back to RealPage Economy Express. We are starting this episode with inflation on both the consumer and producer sides. Consumer prices ticked up 0.2% in April, a modest rebound after March's slight decline. Year over year, headline CPI eased to 2.3%, the slowest pace since early 2021. On the producer side, prices actually fell 0.5% back in April, the largest monthly drop since 2020, driven mostly by a sharp decline in service margins. Housing supply showed mixed signals. Permits dropped 4.7% in April, and housing starts were roughly flat month over month. But completions fell nearly 6% for March and more than 12% compared to a year ago. That could point to tighter near-term supply. Existing home sales also cooled. Sales dipped 0.5% in April and remain 2% below year-over-year levels. Activity is still hovering around 75% of pre-pandemic norms. But there's more inventory to choose from, and prices rose 1.8% year-over-year to a median of $414,000, with the Northeast leading the way. And rising mortgage rates are still a headwind. Mortgage applications fell 5.1% in mid-May as the average 30-year rate climbed to 6.92%, the highest since February. Both purchase and refi activity declined, even though purchase apps were still up 13% from a year ago. Meanwhile, Moody's made headlines by downgrading the U.S. credit rating to AA1. The agency cited rising debt and interest costs as key risks, expecting deficits to reach nearly 9% of GDP by 2035. So, what could this mean for our industry? Well, if the downgrade pushes treasury yields and mortgage rates even higher, borrowing costs will go up, slowing new development and making refinancing pricier. On the flip side, elevated mortgage rates could keep more would-be buyers in the rental market, supporting occupancy and rent growth. But capital markets will likely tighten further. Investors will demand high returns to offset increased risk, and lenders will become more selective, making financing more difficult and expensive to secure. Zooming out, the Conference Board's leading economic index fell 1% in April, its biggest drop in over a year. Most components weakened, especially consumer expectations and building permits. Still, the coincident index ticked up, suggesting the slowdown hasn't tipped into recession just yet. On the jobs front, weekly unemployment claims came in at 227,000. That's a modest improvement from last week, but the 4-week average is now at its highest since late 2021. So to wrap it up, inflation is easing but still sticky, housing supply is tightening, credit concerns are growing, and mortgage rates remain a headwind. The labor market is holding, but cracks are starting to show. We'll keep watching, and as always, break it down for you right here on RealPage Economy Express. See you next time.